But yes, that was Control. You can now hear us, and we're going to be talking about acquisitions. So we mentioned this in one of the news items with Epic acquiring Tonic Group Games, and we've just noticed over the last 12 months there's been so many acquisitions going on that it would be remiss of us not to talk about it. It's such a huge factor in the games industry. Just before we start our talk, I will preface with the fact we're not merger and acquisition experts. We just observing what's going on, reading what's going on, and naturally, as we always do, we have an opinion. So we thought we'll talk about
We've
it.
we've had this on the radar for weeks. I mean, all through lockdown, every week acquisition, 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 and we're like, we should really talk about this, but we never really had the confidence or the knowledge. But we thought, oh, let's just dive into it because it is such an interesting subject. And so yeah, don't take any investment advice from us, but
Yeah.
we'll highlight a few things.
So yeah, as we said, there's a lot of acquisitions been going on, and it was estimated that $20.5 billion in acquisitions, investments, and IPOs happened in the first 9 months of 2020. So that's a huge amount of money. And bearing in mind that's the first 9 months of 2020, that doesn't include the $7 billion purchase that Microsoft paid for ZeniMax. So you can add 7 million just for the last 3 months with that alone, and everything else that went on. So also in 2020, Zynga bought Peak Games for $2 billion. There was 41 mobile game company acquisitions, which was a total of around $4.4 billion worth. PC and console game deals were around $10.5 billion. Tencent, as you might expect, were very active, and also the Embracer Group. So the Embracer Group led 11 acquisition deals. The largest was of Saber Interactive, which was worth $525 million, and the acquisition of the Saber Group saw them get access to studios in about 6 or 7 different countries. Embracer Group, as you may or may not know, also own Koch, who are the parent company of our friends over at Deep Silver. So yeah, lots going on, and the Embracer Group are already getting going in 2021 with they brought in recently Gearbox, which I think we mentioned in a news item on the show. So yeah, lots and lots of acquisitions being made. In VR and AR games, 12 deals happened in the first 9 months of 2020, combined value of 344 million. So, this isn't chump change, and there's a lot of companies changing hands.
And we'd be remiss to not get the weekly mention of the global pandemic that's going on as well. So that certainly hasn't obviously a deal doesn't turn around. Deals like these don't turn around in no time, but it certainly isn't looking to be slowing down or stagnated in any way, shape, or form, thanks to the pandemic. So yeah, lots and lots going on.
Yeah, so I mean, the industry is booming anyway, with or without the pandemic. Obviously, gaming every year is seeing a huge boost and it's a huge industry of growth. Obviously, that has been amplified in 2020. It's one of the industries which wasn't, it didn't get off scot free, but it was maybe less impacted as some other industries due to the pandemic. Obviously, people want to play a lot more games, and as soon as companies could get themselves set up to work remotely, they could carry on. Obviously, we've talked about not as efficiently as they would have typically been because they weren't necessarily prepared for this. But yeah, the industry has boomed, and that is one of the reasons potentially behind why we've seen so many happen in 2020, especially with the publicly traded companies. They're starting to trade at higher multiples, and investors are obviously going to be interested in if they can then negotiate a deal lower than that. Any exponential growth is going to be great for them. So that's definitely going to have played a factor with that boom and the stock prices going up. That people want to get in before it peaks, I guess.
Yeah, and I think there is a correlation between when stock prices go up when revenue goes up. It's not so much based on profit. So if you make an acquisition, then your profit gets impacted, but you're introducing all the new revenues from these additional companies. And we tend to see if you make an acquisition, your revenue goes up, your stock price goes up. This is an incentive for these large publicly traded organizations to do more acquisitions. And also it's something to do with the profit. If your game is blowing up and you're selling loads of copies or you're getting loads of subscribers, you're making a lot of money. Your shareholders expect you to do something with that money, or you pay it out to the shareholders. So, there's a lot of incentives for these successful games businesses to chase these acquisitions.
Yeah, and I mentioned before 4.4 billion in the first 9 months of 2020 were around mobile game company acquisitions, which was about 41. I was listening to a podcast the other day around this, and they were talking about that we're likely seeing more and more acquisitions on the mobile front because it's reaching that maturity stage, and people are getting more confident in they understand what the value of these companies are, and they understand what the life cycle of those games are going to be. And it made me smile because they referred to them as forever franchises, which is we refer to things as long life games. So it's kind of along the same line of thinking that we have, and that people are seeing that these games that stick around, they continue to do well. Like they were talking about looking at the top 100 grossing mobile games, and that list doesn't change very often. It's typically the same games. It's very difficult to penetrate that list and get in. So if you're wanting to grow your business and get into that, the only way you could potentially do that is by acquiring one of those companies and adding that to your portfolio and kind of reaping some of the rewards of backing that company that's doing well and helping push it on rather than trying to compete with it essentially.
Yeah, and I think if you see the hallmarks of one of those long life games or forever brands, if you can see the early indicators are there that this is going to be one of those, and you have the cash reserves, as we were saying, like a lot of these games companies have done extremely well. They have the money, they have the profit to try and do something with. It's kind of like a very appealing proposition to say, well, actually, this game here, it looks like it's got 3, 4, 5 years of life in it. Let's get in as early as possible and help maybe scale them up, grow that quicker. An isolated company might not be able to achieve the same growth without that support, and everybody benefits.
Yeah, and something that's worthwhile noting as well, like a lot of these games companies are going to do great things. In the initial, they do get investment, and eventually those people who invested are going to be looking for an exit strategy and looking for like liquidity of their investment and reap their rewards for being upfront. So it's not uncommon if once those funds have reached, they need time to mature and to generate the profit that it's going to be worthwhile to sell. So if you've invested it and you're ready to jump out and you think, okay, now it's time for me to leave, get my money back and the profit from the investment, the way to do that is to sell that on to someone else. And that's not to say that necessarily investors are like, right, time to jump ship and forcing founders of game companies to sell. A lot of them, when the investors initially in the early days, like they'll reach a barrier of how much value they can add themselves. And if, as you said, if you want that game studio to kick on to the next level, you're going to have to look for strategic partners to give you the next boost that you might not be able to do yourself. So I think that definitely plays a factor in it as well. Like, as I said, the exit strategy, or not necessarily the exit strategy, you're so invested in it, you want to kick it to the next level, but you can't do that without being acquired or trying to merge with someone else who can bring that weight to push you that extra bit forward.
Absolutely, and a lot of the headlines around these huge acquisitions, but there are smaller games company acquisitions, game service providers. Even ourselves, a very small example of that. Obviously, we were previously moved to. We joined the Etch group, and that was exactly that scenario you're talking about. We'd running a business, a games business, or any business is extremely difficult, and it's very hard to break through the various ceilings, each layer. And if there's an opportunity to get some extra support or some help, it's not always about say exiting or big financial rewards. It's actually unlocking the next level, and that can be really appealing, especially obviously we know a lot of game developers, and I'm sure there are lots of people watching who can relate. It's kind of like you want to make games. You don't necessarily care about the ins and outs of building a business, growing a business, adhering to HR requirements. And if somebody's offering you the opportunity to focus on doing what you love, because we have the resources and we have the services and the teams and the personnel to do all the other stuff, that is an appealing proposition on top of any financial reward or security that you get from it.
Yeah, absolutely, and kind of it's a two-way thing. Like it's been, as you alluded to there, like it's beneficial to both parties. Obviously, if you're the company getting acquired, you're typically getting that injection of cash, you're getting that security net, you're getting that backing from someone else to help push you forward. But the people who are acquiring you are, getting your IP, they're getting your expertise, they're adding your value to their portfolio. Typically, you're joining a portfolio, so that benefits them. Like in the example of we talked about earlier with Epic buying Tonic Games, and obviously with that we said they get Mediatonic, Irregular Corporation, and Fortitude Games, and likely without the boom of Fall Guys, that's probably not a deal that's going to necessarily happen or be worth the value that it was. But yeah, for those in the Tonic group, all of a sudden they have this huge backing behind them, and kind of it takes some of the pressure off. And Epic Games now have Fall Guys, and they have the studio that made Fall Guys, where everyone's now been like, right, what's next? Because that's the thing. Once you've done a game that is great, everyone's waiting for the next one because you're expected to do that next game. And as silly as it might sound, that's probably a great time for an investor to get in, because you've proven that you can do it, and they can expect you to potentially do another great game, but it's not guaranteed. So you could potentially buy a Tonic Group at the value of what it's worth with Fall Guys and expect them to go and do things, but you're not necessarily going to have to pay for the next big blockbuster. You're backing them that they've got another one in them.
Exactly. And it comes back to what I was mentioning earlier about kind of the early indicators, and obviously not even an early indicator in the case of Fall Guys. It was a huge smash hit, but it follows in the wake of Fortnite, also owned by Epic. And if they're thinking, well, Fortnite was our lightning in a bottle, and we don't necessarily have the formula to recreate it, but what we do have is the formula to go from 12 months to 3 years and keep it growing, keep it evolving, keep our audience engaged. We've got that formula. They've got the lightning in a bottle at the beginning bit. Why don't we partner up and apply the lessons that we've learned from Fortnite to Fall Guys, and give that an extended lease of life, which I've no doubt will be a conversations that are happening, and knowledge being transferred there for sure.
Yeah, and the thing with mergers and acquisitions is it lets you potentially move into a new space where you don't have the expertise, and you can bring that company in that's going to have that expertise and push you. So we talked about on the show a couple of weeks ago when EA acquired Glue to expand their mobile business. I mean, I think they said it was going to increase their mobile business by, I forget the figure, but maybe like by 50%. And that was a mark of intent that, right, we are getting involved in mobile games. We don't have the capability ourselves. The only way we're going to be able to do that is if we acquire someone, and they acquired Glue. So that enabled EA to get into that market, because otherwise they're going to have to start from scratch. Obviously they'd have the funds to start from scratch, but why would you when you also have the funds to buy someone who is established, already doing well, already has the expertise, and you're immediately in that market? So it's a great way to expand your expertise and your market reach if you kind of buy someone who's been there, done that, and has proven they can do it.
Yeah, sure. And I guess it would be very, very complimentary and positive. It's not always great for all the parties. There's a lot of risk involved in these acquisitions, and I think particularly in such a culture and lifestyle focused industry as game development. Let's take Mediatonic or the Tonic Group. They are a relatively small, close knit, kind of family feel organisation that are now becoming a part of one of the largest games businesses in the world. There will be changes. There will be even down to things like operations and HR processes and things like that they're not used to. And that's another consideration for both parties: is are we a good fit? And do our values align? Do we all know what we want out of this? I'm sure it's very rare that the entire studio gets consulted on these things, but there will be an impact on them, and it doesn't always work out. And as we were talking about with the sort of reallocation of resource at EA, sometimes if you're working on this great, highly exciting thing, but it's too small for this huge organization, you might get repurposed, reassigned. and yeah, that kind of agility and autonomy can be hampered.
Yeah, exactly. It's a difficult decision to make, and it would be easy to make the assumption that you sell to the highest bidder, but that's, as you say, that's not necessarily always going to be the case or the right thing to do. It's very much getting that culture match. And the podcast I was listening to before, I forget which studio it was, but they were saying like they were acquired by Zynga, and Zynga weren't the highest bidder, but Zynga had the best offer of keeping their autonomy and the backing that they were going to give them from not just the money, but letting them be autonomous. And, you know, making games is a very creative venture, and we know the people who make them know what they want to make, and they want to express themselves through the game. So then if you're acquired by someone who's like, no, you've got to do it this way and you have to do this, like that, the cash is great, but if it's not everything, and if you lose your creative grasp,
Exactly.
then
I think purpose is a big consideration in this kind of like, yeah, it's great to have financial reward from these things, but you've still got to be working, and even the founders are often stay involved and contracted to a certain amount of tenure, and you've got to be thinking, well, is this going to continue to go in the direction I want? Is there a reason for this acquisition? And often acquisitions are for already successful. I'm sure Mediatonic didn't need the cash injection. That's probably one of the least interesting things for them, because they probably generated more revenue than they knew what to do with. And maybe that's one of their thoughts is, we don't. This is new to us. We don't know what's best to do with all of this, all of these assets and resources that we're now collating. And actually, here's a guiding hand, and we like their vision and their mission. And so yeah, I think the alignment is a very key consideration. Obviously, you've got to get to the point of having interested parties in the first place is probably the biggest battle for everyone.
Yeah, absolutely. And we've talked a lot about the value of IP, and obviously another value which can come into play when making acquisitions and kind of steps away from people being left with their autonomy necessarily. And this works well for some people, is that it's a way of bolstering your workforce. We know in the games industry, recruitment is a huge thing. Like pretty much everyone is hiring all of the time, and acquiring a studio can be a great way to bolster your
Absolutely.
workforce.
There's and a lot of acquisitions are based solely on that. There is no interesting IP. There's maybe sort of average potential in the work that's happening, but there are some talented people here. They call them acqui-hires, I think is the fun term around that. And yeah, absolutely, recruitment is so hard and so competitive, and maybe this is a good way of shortcutting that.
Yeah. So I'll just wrap up by saying, like, obviously we've been talking about kind of like $1 billion deals, and that's like the top end. It's not all $1 billion deals. Like kind of the top line. The Microsoft buying ZeniMax was $7 billion, and then even within the scales within a group. So, for example, the Sumo Group, they acquired Pipeworks for 100 million, and then they acquired Pixelant for 250,000. Now, I'm not saying 250,000 is chump change. It's not at all. That's a large sum of money, but those are the kind of scales that you're talking about, and there's large numbers of these deals happening. Like I said, 41 mobile game company acquisitions for 4.4 billion. That's going to vary from the hundreds of thousands to the millions to the billions. So it's a huge scale. Quite an unfathomable scale, but yeah, when we talk about it, and it sounds, we're talking about $1 billion deals which seem unattainable. Like that's not all it is. There is a huge scale when it comes to acquisitions. So yeah, and we've talked about it.
There
We
we
said we were going to
go.
talk about it for weeks.
Let us know how
Finally did it.
let us know how we got on, because not our area of expertise by any stretch, but obviously we do try and keep on top of all aspects of the industry, and that is a very significant one, and well worth keeping tabs on and making your predictions. So Adam posed the question in the chat: if you were going to buy a video game company, which one would you buy? Edge Play. If anybody's got if Microsoft have got another $7 billion, I'm sure we could have a chat to the higher ups and negotiate something. But yeah,
we'll see. But yep, I want to thank you, Dan, for joining me, as always, we talk about the news. Thank you to Adam and Ben for checking out Control in the middle of the show. And most of all, thank you everyone who has joined us in the chat. Thank you for participating. We love seeing your comments, and we appreciate you taking your time out of your afternoon to spend it with us. As always, we'll be back at 4 o'clock next week to do it all again. We'll have more news, a new game to try, and a new topic to discuss. And yeah, we're looking forward to see you there. If you can't wait to see us until then, check out our YouTube channel. All the old episodes are put on there, along with other industry interviews and us checking out games. Or just come say hello to us on Twitter. But until then, we'll see you next week.
See you later.